Hi, traders. My name is FixProfit. I am a trading robot for the fastest and most efficient trading possible. Now I will show you a turbo boost of deposit from $1. Yes, I will start with just $1 on my account. Currency pair Euro, Hungarian forint OTC, time frame 1 minute. My signal is lower. For ease of viewing and to save you time, I have increased the speed of price movement. From now on, I will show you the results. Our team gives you the opportunity to use 3 signals from me, a robot with an average passability of 90% free of charge, after which you can buy me at a discount of 90% and work without limits. There are 10 places left at a discount. Link in the description. Yes. After purchase, FixProfit gives unlimited number of signals. Also, after purchasing FixProfit, you will have access to VIP chat, where market analytics is conducted. There, our team analyzes various market situations and shares signals. So, the first trade closed in the plus. Now I will invest the whole deposit amount in each trade to maximize the profit. My new forecast is higher. Friends, take part in our big contest with a prize of $1,000. The conditions are simple. Watch this video in its entirety, put a like, subscribe to the channel, and write 1 comment on trading under this video. I will choose a winner using randomizer and publish the results in my Telegram channel, where our team also shares trading knowledge and helps traders to learn. The link is in the description. Subscribe. The contest is held every week. So, $1.38 went into the account. The new investment is $3.19. I'm issuing instant predictions. My new recommendation is higher. Now I want to speculate about deciphering central bank policy, how interest rate decisions affect trades. Central banks, such as the Federal Reserve in the United States, the European Central Bank, and the Bank of Japan, are responsible for managing their respective countries' monetary policy. One of their primary objectives is to maintain economic stability by controlling inflation and fostering economic growth. Interest rates are a key instrument in achieving these goals. Central banks set interest rates and use other monetary tools to influence the economy. So, here comes another successful transaction. $2.39. The new market entry amount is $5.58. Lower signal. By adjusting interest rates, central banks aim to keep inflation within a target range. Central banks stimulate or cool down economic activity by changing the cost of borrowing. Central banks monitor and ensure the stability of the financial system. Types of interest rates. Policy rates, the rates at which central banks lend to commercial banks. Discount rates, the interest rate charged to commercial banks for short-term loans from the central bank. Deposit rates, the interest rate paid by central banks on reserves held by commercial banks. And here is another deal closed in the plus. Now I'm going to change the currency pair. Australian dollar, US dollar OTC. $9.76 is an investment. Lower signal. Interest rate decisions by central banks influence currency markets through several mechanisms, including interest rate differentials, capital flows, and market expectations. Interest rate differentials between countries are a primary driver of currency values. When one country's interest rates are higher than another's, it attracts capital flows seeking higher returns, leading to currency appreciation. Carry trade. Investors borrow in low interest rate currencies and invest in high interest rate currencies to profit from the interest rate differential. This activity increases demand for the high interest rate currency, leading to its appreciation. And I continue to make a profit. The new signal is lower. Investment flows. Higher interest rates attract foreign investment in bonds and other fixed income securities, increasing demand for the currency. Interest rate changes influence the movement of capital across borders, affecting currency values. Foreign direct investment (FDI). Higher interest rates can attract FDI as investors seek better returns on their investments. Portfolio investment. Changes in interest rates affect portfolio investments, such as stocks and bonds, as investors adjust their holdings based on expected returns. Here comes another successful transaction. My new investment is $35.98. The new recommendation is lower. Friends, working on this structure with me, you will become much richer. FixProfit knows everything that developers have studied for 9 years. And all this experience is given to you for a symbolic fee. I'll triple your deposit on day 1. The investment you make at a 90% discount will pay for itself in the first hours of operation. Now on the screen you can see the reviews of traders who are already making a lot of money with my help. These users have made the right choice. the choice to work with progressive artificial intelligence. I continue to make a profit. I'll go into the new operation at $69.08. In 2 clicks, you can get my signal. Higher. Market expectations about future interest rate movements significantly impact currency values. Forward guidance. Central banks use forward guidance to communicate their future policy intentions, shaping market expectations and influencing currency markets. Economic data. Traders closely monitor economic indicators, such as GDP growth, inflation, and employment data, to anticipate central bank actions and adjust their positions accordingly. So let's take a look at another result. $63.55. A new investment of $132.63. Higher signal. Trading in response to central bank interest rate decisions requires a combination of fundamental analysis, technical analysis, and risk management. Fundamental analysis involves evaluating economic indicators and central bank policies to understand their impact on currency values. Monitor key economic indicators, such as GDP growth, inflation, and employment data, to assess the health of the economy and predict central bank actions. Pay close attention to central bank statements, meeting minutes, and press conferences to gain insights into future policy intentions. $122.02 is a new profit. I will now enter the market at $254.65. Higher. Technical analysis helps identify trading opportunities and manage risks during periods of interest rate changes. Identify key support and resistance levels to anticipate potential price movements and set entry and exit points. Use trend analysis tools, such as moving averages and trend lines, to identify the direction of currency movements and potential reversal points. Employ volatility indicators, such as Bollinger Bands and the average true range ATR, to gauge market volatility and adjust trading strategies accordingly. So, another profit. It's time for the final trade. I will enter the market at $488.93. I got to a great result very quickly. My final prediction is lower. Effective risk management is crucial for navigating the uncertainties and volatility caused by interest rate decisions. Adjust position sizes based on the level of risk and market volatility. Smaller positions can help mitigate potential losses during volatile periods. Diversify the trading portfolio by including multiple currency pairs and other asset classes to spread risk and reduce the impact of adverse movements in any single asset. Now let's summarize the results. The final deal ends in plus, thanks to my signal. Today I was able to increase my deposit from $1 to a wonderful sum of $938.75. Subscribe to the channel and click on the bell, friends. Bye.